Hello and good evening, everybody.
Hello,
Hi, Amit.
hello. Hi, Benny. Hello.
Okay,
I was I was
you
staying in
all right?
Malaysia. Yeah.
Okay lah.
Okay lah.
It's been raining in Malaysia, and right now we are basically no need to wear masks. I mean, it's not
Oh,
compulsory
okay.
anymore. I'm not sure about
Okay.
Singapore though.
Same. Now we only need to wear masks in public transport and medical facility lah. If not, the rest is voluntary. But you know, Singaporean very kiasu lah. So all of us are still wearing masks.
I think we're not used to not wearing mask
Yeah.
after a long time, right?
That's right. Yes. Now when I see people sneeze, it's like what? It's like a crime like that.
Yeah. Anyway, guys, if you can hear us, can you just type yes on a comment so that we know that you are able to hear and see us clearly before we start? Yeah. By the way, your name is pronounced I-Min or I-Min?
I-Min.
I-Min. All right.
Yes. Yeah. Don't ask me why. Yeah.
Okay, I was just wondering, is that I-Min or I-Min? So now I better get it right, lah.
I-Min.
Okay,
good.
thank
I
you,
think
Kelly.
we have people playing. Well, I heard that there's 100 over people joining us today.
Yeah, normally lah. We'll see how it goes.
Okay.
Hopefully there'll be more people joining us today. Anyway, guys, if you have, if you can share on your Facebook so that more people will be able to join today's session, which is quite interesting because we have actually invited I-Min all the way from Singapore. I mean, not yet lah. He's still in Singapore though.
Still in Singapore. Yeah.
He's just going online.
Yes.
To basically share with us, right? Because we have been also having guests to also share with us right now when the markets are tough. I think this is a time where everybody is asking a question whether, are we at the bottom yet? Whether are we going to go into recession and so on and so forth. And therefore we want to basically, get your brains a little bit lah. Right?
Okay.
As an to see where our market is heading. Is there comfort, or are we gonna see more challenges to come? Right.
Very
So
happy to share my views. Yep.
yeah. So basically, I-Min is from Singapore. He has been in industry for quite some time. He has been as an analyst, a fund manager, and he's a CFA charter holder as well. So he's one of the person that you can look for advice when it comes to investing. He will be a good person to look for lah. All right. So yeah, but whatever it is, before we start, right, we always have to put this, whatever that is being shared here today is for educational and informational purposes only. Right? It's not intended as any investment advice. Therefore, if you want to look for investment advice, please do look for a licensed investment advisor. But we do hope that whatever information that we are able to get from today will, you can do your own due diligence. You can get more information from I-Min, our guest, so that you can make better investment decisions. All right.
Thank you so much.
Okay, so it looks like we are set to go. Anyway, guys, please do share tonight's live stream to your Facebook so that more people will be able to join. And thank you for sharing. And yeah, I think we want to start. I-Min, maybe you want to just, I know I just briefly introduced you just now, but maybe you want to introduce yourself just a little bit.
Sure. Okay, so of course, good evening, everyone. So thank you so much for inviting me to actually share on the Equity Striker platform. So happy that I can actually share my view here. So my name is I-Min. I have been a professional investment educator for the past 11 years already. I actually run a company called Invest Coach Pte Ltd, whereby I actually provide education to retail investors, predominantly in stocks. So prior to that, I was working in some of the major corporates, like for example, CapitaLand, Phillip Capital, doing various sorts of investment, predominantly real estate, so on and so forth. So really thank you so much for inviting me. Yes.
Yeah, it's really a pleasure to have you here, I-Min. Yeah, I mean, probably we are quite happy to have you here as well, to hear at least from another point of view, right, on where market is heading. So today's session is going to be more Q&A. So if you guys have any questions during the conversation, you can type in the questions. I can be your moderator. I'll bring the questions up so that I-Min can answer you guys. All right. So please do take this opportunity to ask him questions right now. But of course, there will be another date that he'll be back again, which I will share with you guys later. All right.
Yeah,
so
forward.
Yeah. I-Min, we all know that during the COVID-19 pandemic started in 2 years ago, market actually came down, expecting that to to affect the economy lah. But we do see a very strong rebound after that, right? During the pandemic. I don't know, but in Malaysia we have one of the highest accounts opening in Bursa Malaysia, right? Investing in equities, because I think everybody just at home, nothing to do.
Yeah, nothing to do.
So everybody open an account.
Yes, yeah.
And yeah, we have very strong movement in 2020. But of course, moving forward right now, we are looking at markets starting to taper off a bit. We are seeing a correction happening. Of course, there is a fear right now, right, that because of high inflation, and the US is really adamant, really serious about bringing down inflation by rising interest rates. But of course, if you look at the markets, they have already came down, right? Expecting this to be, and it's quite interesting to also see that despite the US Federal Reserve is going to raise interest rates, Europe has just raised interest rates, but markets are actually going up, right? So yeah, so we want to basically share, maybe just share your view first on where do you think the economic performance has been so far year to date lah.
Okay. So, of course, as per what you mentioned, this year hasn't been really a fantastic year. So, we came up from COVID. We hope 2020 was a lousy year. We hope 2021 was better. No, it didn't happen. Then we were hoping that 2022 is better. So actually, it didn't really happen. Then, of course, beginning of year, you have things like inflation, you have interest rate. All this has been, capping the market, so preventing it to go up any further. So if you ask me, actually going forward, I actually do see a little bit of recovery from a global perspective lah. So let's say, you know, I use Dow Jones as sort of like a benchmark. Of course, a lot of the markets are actually correlated to Dow Jones. I actually do see a rebound, not a very strong one. More of a rebound. Okay, reason being that it seems like at least all the bad news we know of are priced in. Okay, like for example, inflation. We have been talking about inflation since Chinese New Year. I remember I cannot. I got very expensive oranges, you know, all the plants, all the flower very expensive, you know. We talk about that since Chinese New Year. We talk about interest rate increase for the longest time. COVID, no need to say, we have been talking about it for the past 2 years. So there seems to be like a fatigue in the Ukraine war, for example, started fight for 6 months already. So it seems that at least at this period, there isn't a new bad news lah, which is good. Okay, even though there is no good news, I wouldn't say that there's a very clear good news, no good news, but because of investor fatigue, that's why I actually do see a rebound. Okay, but I would say that the rebound will not be very extended lah, probably another 1 to 2 months max. Okay, going forward, if you were to ask me, of course, I'm not sure whether if you don't mind, I mean just comment going forward. I'm actually coming from a longer term perspective. So basically, I practice long term investment. Okay, I'm not really a trader per se. Okay, so I actually look at things from a longer perspective, like for example, 6 months, 1 year. If you were to ask me, the market is definitely going to be a lot more volatile. Volatile. Okay, Benny, is it okay if I can just share my screen?
Yeah, sure.
Okay, I just want to show certain trend. I suppose KLCI, most of the audience will be very familiar, right? Okay, I just want to share something with you. Not sure if you really have noticed. Okay, I believe you can see my screen now.
Yes.
Okay. What I'm doing now is just pull out the KLCI chart. Okay. Okay, now what I want to show you here is this. You can see that from, okay, this is KLCI from 2000. Okay, you can see that, oh, it actually has a very good run for the past 15 years, from 2000 to 2015. So there is a clear upward direction. Okay, but after 2015, you can see that you will see it's actually more volatile, or in fact, it tend towards to be more of a sideways. Okay, so if you were to ask me, this trend is actually likely to continue. That means the market will tend to go more of sideways. Okay, rather than you have like a very clear or at least a long-term upward trend. Okay, as you can see here, once again, I compare. So this is, of course, there's up and down, but there's still like a long-term upward trend. But 2015, after that, okay, I see more of sideways. Okay, so reason being that, you know, the cycles are getting shorter. Okay, the cycles are getting shorter. There is more unknown. Like for example, climate changes is actually one key unknown. Okay, and of course, the most recent, the sensitive issue is like, for example, the China and US relationship. You know, so on and so forth. So I actually do expect it to go sideways from a longer term perspective, but from a short perspective, you know, 1 to 2 months, I actually do see the market actually popping up. Okay, I hope I answer your question. I don't know if I've talked too much.
Yeah. So I mean, this Malaysian market has been bearish, you know, since for the past few years. It doesn't really follow the US market, which, you know, even during the pandemic, it has gone to historical highs, right? But not the Malaysian market. So and of course, the US market has also started to pull back because of the interest rate hike and all that. But what do you think? You know, the US market, are you still going to see the similar trend, which is going sideways, or do you think there's still room for market to go downwards?
Okay. So again, I have to talk from two perspectives. I think it's easier if I would just share my chart again.
Okay.
Let me just share my screen. So if I were to look at DJIA, okay, so of course, US had a very good run. Maybe I look at shorter term. So after COVID, they actually have a very good run. Okay, then there is a sideways market. No, now for US, I tend to believe that at least up to the end of the year, okay, there's a slight upward trend. Okay, for reason that I mentioned just now, at least for now, there is no new bad news. Okay, all the bad news have been priced in. Of course, fingers crossed, hopefully there any black swan event. If let's say the news is still keep talking about inflation, interest rate, I think it's like a broken record. So you're probably, still go back up. I would think so, or at least up to the end of this year. Okay. But if you talk about longer term perspective, I don't think that such bull run. Okay, like we have experienced. If you actually look at US has been enjoying quite a few bull runs. Okay, like for example, 109 all the way to it's an 11-year bull run. And after that, this bull run, I tend to think that such bull run may not be as strong. I think the word is like strong if you talk about 3 to 5 years perspective. Okay, but the short term one, I still see a rebound. Yeah, that's my views for US. Yeah.
All right, thank you. So going back to Singapore, what about Singapore?
Okay, Singapore market now has been you need a different perspective to actually look at Singapore market now, which is actually very suitable for people like me, okay, of certain age already. Hopefully, I still look young to you, but I'm certain age already. so Singapore now, it tends to, if you can see, the market also same picture. Okay, if let's say, for example, we actually look at from 1990 to 2008, okay, again, you see uptrend, but after that, in fact, for the past decade, 2010, can you see it's a very clear sideways market. So we have actually entered like sideways market for quite a long time, relatively speaking to US, relatively speaking to Malaysia. Malaysia, I think, after up to 2015, you still see an upward trend, but you can see Singapore from 2020, 2010 onwards, it's actually a sideways market. Okay, but Singapore market has been very good at giving dividends. So at least relative to US, okay, we talk about after tax, our dividend is actually quite strong, especially with our Reits market. Okay, Reits market, because by Reits, you're basically landlord. So today you can actually get a yield of up to 8%, 10%. Of course, those are probably considered the higher risk one. But if you talk about what we call grade A REITs, that means your toy and swanky offices in our CBD, you can hit about 5%. Okay, 5%. So for Singapore market, we now tend to be what we call like an income market. That means it's very good for those who actually really go for long-term investment. Okay, long-term investment, and we just collect the yield, which is what I'm doing now. I mean, my retirement plan is actually very simple. Basically now I just plow my money into the stock market like a bank account. Okay, so like I said, I don't really trade. So to me, this is my bank account. Okay, oh no, did I share the screen? You're seeing my screen?
Yeah, you can share now.
Oh, sorry, you're not seeing my screen.
No,
okay,
no.
Apologize. Sorry. Okay, let me just share my screen. Okay, you can see now,
Yes.
Okay, so this one to see, I can see side market. So to me, this is like my bank account right now. So I just keep building the portfolio. Okay, so the good thing about sideways is that you also don't expect the downward to come very fierce. Okay, you can see that is the range is lesser. And I just let the dividend grow. And once the dividend, Okay, because you talk about REITs, like our blue chip, the dividend can be quite regular. And once the dividend can actually cover my expenses, then I am what we call financially free. No need to work, passive income, live happily ever after. So Singapore market is actually very good if you have this objective.
Right, right. So do you think at this moment, since I think a lot of portfolio has gone down
Mm-mm.
for investors,
Yes.
maybe not a lot of investors are like you, Imin. They are, you are very patient. You already have your long term plan. You're not trading. You're building your income, lah, right? Your passive
Yes.
income through investing
Correct.
in stocks. But for those who are who have been investing and their portfolio is down, and what do you think? Do you think they can still build the dividend portfolio? Um, let's say lah, right? Because most of the investors here and those who are the bigger retail investors are probably aged between 40 to 50 years old, right? Do you
Mm-mm.
think they still can build that kind of portfolio until the next 10 to 15 years?
Definitely, definitely. And I think it's very important. So to summarize what I've said just now here is this. If you ask me, trading today is a lot more difficult compared to trading, if you ask me 3 years ago, 5 years ago. Okay.
Mm,
So if you talk about 5 years ago, things are more predictable. Okay. And it doesn't move so fast.
mm,
So today there is actually too many uncertain things. Or put it this way, today the possibility of black swan event in today's timing is a lot higher compared to like 5 years ago, 10 years ago. You talk about climate change, it's a very scary thing.
yeah.
Tomorrow we can have suddenly one country being sunken, something like that. Or you have this huge rain that you can basically crush certain town.
Yeah, it's also quite weird right now. Even in Malaysia, I know whenever there's rain, somewhere will have gotten flooded, lah.
Precisely. So the probability of a black swan event is actually higher. So in that sense, it actually make trading more difficult because trading, no matter what, you need to have a sense of direction, correct? You cannot be neutral. You cannot of course there's certain strategy that but most of the time you have this direction. Is either you think it's going up or you think it has to go down. So what I'm saying here is actually more difficult. And it definitely makes sense to have an income portfolio. Of course, I'm not saying for going trading totally. You like to trade down, but I think it also makes sense to diversify, have an income portfolio on the side. And this is what I do now. I still do trade. Okay, I still do trade, but my main source of investment will come from dividends. Okay, and the trading, if to me is if it goes well, of course I can expand my portfolio a little bit faster. But if it doesn't go well, it's the money I can lose. Answer to a question, I think not only they could, I think they should. Okay, going forward, I would really advise that there should be at least a balance between income and trading, because trading is, if you ask me, getting more and more difficult based on the fact that it's very hard to actually gauge the direction now.
Yeah, markets are getting more volatile now. I think thanks to also information that is now freely available and it's very fast, right?
Yes, correct. Yeah.
I mean, if you have a disaster somewhere, probably, those 10, 15 years ago, we probably get the news maybe like one day or, half day later. But now, Facebook can be your source of news income very fast, right?
Yeah.
So
Precisely,
market reacts very
precisely.
fast.
Yes. Correct. Yes. Yeah.
Yeah. Okay. Another question is we are seeing a time now where interest rates are going to rise, and I think, like you said, they put it rightly earlier as well, that the market has probably factored in the interest rate that's going to come up, and the
Correct.
market has already come down before they raise interest rates, right? So
That's
I
right.
think the question right now is, I know you are saying that trying to build dividend income or even income portfolio by depending on dividends, right?
Yes.
But with rising interest rates environment, do you think that building dividends on the stock market, including REITs, is still attractive than putting my money into money markets like fixed deposits where interest rates are rising, or even
Okay.
bonds, lah?
Yeah. So of course, number one, I am an advocate for diversification. So to me, stocks and are like girlfriend, not wife. Okay, it's not funny. It's meant to be a joke anyway. Okay, I try. Okay, so anyway, I
you always don't fall in love with stocks, right?
I don't believe in which is better. Okay, it's only diversify. And I do believe REITs definitely have a role inside. Okay, number one, to answer your question. In fact, a lot of people query on, interest is up, the REITs yield is affected. That is not totally true. Or at least it's not so significant. Why? Number one, currently 70% of the loan for all the Singapore REITs is actually on fixed interest rate. Okay, so they basically hedge the interest already. Okay, so no, it doesn't mean that eventually won't affect. Of course, how the fixed interest rate work here is this: after a certain period when they need to renew, they had to renew at the prevailing rate. But at least for the short term, you talk about 1-2 years. Okay, the impact of increase in interest rate is actually not significant. That's number one. Okay, number two here is this: we have to understand why interest rate increase is actually because of what? Is actually because inflation. Okay, and one of the source of inflation is what? Rental. Okay, so in fact the rental price has actually been going up as well. And so yes, interest rate go up, but rental is going up. So net the impact is actually less significant. Again, I just want to share with you a chart, if you don't mind. Okay, let me again just share my screen.
Sure.
Okay, so this is from the Reits report as presented in SGX. Now, what you actually see in the dark blue line here, okay, is actually the dividend yield. Okay, so you can see that the dividend yield has actually shot up. Of course, two reasons. One is the rental has went up. Okay, undeniable. Okay, this period the REITs price has also came down. Okay, but the fact is actually has shot up. So this yellow line is the bond yield. Okay, the bond yield. So what this analyst did here is this: he actually take what we call the yield spread. You take the dividend yield minus the bond yield. Okay, and in fact, the yield spread now is actually quite attractive. It's actually above the 10-year average, even at current interest rate environment. Okay, so in fact, if you ask me, REITs has been interesting. Okay, but again, having said that, I'm not trying to say that REITs is better than fixed income, REITs is better than bonds. End of the day, we have to do diversification, and of course, depends on suitability. So personally, I am not a fan of bond. In fact, easily 60-70% of my money is actually in REITs. But of course, to each his own. I do see that REITs should actually put a part inside your portfolio as a diversification purposes.
Right. Thank you. If you have any questions, the audience here, you have any questions for I-Min, please do type those questions down so that he'll be able to answer you guys. We only have another half an hour, so you have this half an hour opportunity to ask him questions. All right. So I-Min, I know that you a lot of focus on REITs, but which are your favorite REITs in Singapore?
Okay. So number one, of course, I cannot give outright stock recommendation. Okay, but
maybe
number
you
one,
don't say which favorite REITs, but which sector is
okay. No worries. Okay, but I would love to answer that question. Okay, now a lot of people we if there's actually quite a difference between investing and trading mindset. So investment mindset, we actually talk about how. Okay, for us, like for me, I think instead of asking like which REIT do I like, is how I actually build my portfolio. Okay, so number one is it starts from my objective. What's my objective? I think I did mention earlier, it's actually about retirement. I want a portfolio, give me steady dividends. Okay. Then end of the day, it's not one or two particular REIT that should be in a portfolio. So in fact, now I have about 25 different REITs inside my portfolio out of the 39.
Right.
Okay. So I accumulate them on a monthly basis. I accumulate them on a monthly basis. Okay, so end of the day, as a retail investor, okay, I see myself as a someone who also don't have access to any special information. Okay, the best way is actually for us to diversify lah. So I diversify over different REITs, and I diversify over different time. Okay, so yes, the REITs. They have varying different risk profile. So obviously, and some of the risks is because of knowledge. Like obviously, because if the property in Singapore, I know the properties better. So to me, the risk is lower. Okay. Whereas, let's say properties in places I'm not familiar with, like certain part of US, certain part of UK, I'm not familiar with. Okay. To me, the risk is higher. Okay. So eventually, to me, it's never which one is good. It's about, if let's say, for example, those high risks, it come at a valuation whereby I think it justify that risk. Okay, I will also go in. Okay, like for example, just these few days, of course, you know what happened to China. China is actually still doing lockdown. So some of our REITs here have properties in China. But today I actually got saw REITs. Okay, I think not good to mention name. I thought tomorrow the stock went up. It's my fault. Okay, there's this REIT. It's a very reputable name. Okay, I like the sponsor, giving 8% yield. Okay, is it risky REIT? I think so. But does the valuation justify? Yes. So I will go in that sense. Okay, so of course, for those who really want to be a little bit more risk adverse, okay, let's say you deal with something you're familiar with, if you come to Singapore, CBD, once you look, you know where the CBD, it can't be wrong. Okay, likely for the next 10 years, 20 years, 30 years, the office is going to be there. It has been there for the longest time. Orchard Road, for example. So I'm not too sure if you are familiar with the history of Orchard Road. So by the way, 200 years ago, Orchard Road is already the most prominent street in Singapore since 200 years ago. So if you say another 50 years, I think it's still okay. So if you want those property, getting 5% yield right now, which is actually quite good. Yeah. And it's what offering today. So today, in fact, this period have been quite poor. A lot of REITs are actually quite attractive, giving very good dividend yield right now. Yes.
Right. Yeah, definitely Singapore will be more attractive than right here in Malaysia, because I think a lot of even Malaysian investors, they look at Singapore REITs because of this diversification that they have, right? Yes. Not just Singapore, but we also have REITs investing in the overseas market as well. And then you have things like data center and all that, which I think there's a lot of this. I mean, there's just a lot of REITs that actually investors can look at. But you know what, guys, if you are interested more later, we have a special deal for you guys. So do stay with us on how you can tap more of I-Min's brain on how to find better REITs and how to build a portfolio with REITs. Right.
In fact, for this period, from a Malaysia perspective, if let's say your base is Malaysian ringgit, this period is even more interesting. Why is that so? Okay, I'm not too sure about Malaysia, but in Singapore, okay, how the Singapore government fight inflation is actually using forex. Okay, unlike US, when they have inflation, they actually increase interest rate. So our first line of defense for inflation is actually forex. That means our currency appreciate. So basically, if let's say, for example, your money is actually based in Malaysia, if you actually buy the REITs in Singapore, you not only enjoy dividend, or you not only get investment return from the property, okay, and probably also from the forex perspective as well. So it can be a good hedge in that sense.
Okay.
So talking about diversification, this is what I really mean by diversification. We cannot always think of investment from trading income, buy low, sell high, buy low, sell high. So investing should be a creative process. That's what I'm trying to say. Yeah. Yes.
Okay, great. Yeah, so other than REITs, I know REITs because you really get, the mandate for REITs is really to pay the investors the dividends, the income, right? So other than REITs, do you also look at dividend paying stocks other than REITs in Singapore?
Oh, of course, of course. In fact, again, this period has been quite interesting. Our banks has been giving very good dividend, 4+%. That hasn't been the case at least pre-COVID. And we have those staple companies, like for example, your Sheng Siong. I'm not too sure whether you're familiar with Sheng Siong. That's basically our supermarket, and you know that the supermarket cannot go too wrong. Even with COVID, people still need to go and buy their Maggi mee and so on and so forth. Giving very good dividends. We have company like, for example, a shipbuilder Yang Zijiang.
Right.
Yeah. So yes, then we also have things like what we call business trust. They are also very strong at giving dividends. Okay, like for example, where the Netlink. Okay, Netlink basically they own a fiber network in Singapore. You know, our internet fiber network again is a very strong recurring business. We have Keppel Infrastructure. They own all the utilities facilities. You know, very stable business. We have HPH Hutchinson Pork Trust, Li Ka-shing's business. So yes, beside looking at using REITs to help me generate dividends, I have also been looking at quite a number of companies. And the good thing about companies is that, okay, even though from a dividend perspective, usually lesser than REITs. So REITs, we are actually looking at 5 to 8% right now. Okay, so if you are talking about companies, you are probably looking at, probably 4 to 6 on average. Okay, but the thing is, company, they tend to have a capital gain or better capital gain relative to REITs.
Right.
Okay, relative to REITs, yes.
Okay, nice. We have an answer. We have a question from CH Ang. Now, if one were able to enjoy forex gains with Singapore dollar against ringgit at 320, you see that Singapore dollar against Malaysia ringgit will go higher.
Okay,
if yes, how high?
so unfortunately, I don't really study currency, but what I can say here is this: as mentioned just now, Singapore first line of defense is for inflation is actually forex. So if we expect inflation to keep going, which is still happening, okay, which is actually still happening, our currency will just have to go stronger lah. Okay, that is number one. Okay, you have to understand like for example, Singapore is they cannot allow interest rate to go up too high. Okay, the banks cannot allow that to happen. Okay, we don't have like a big economy. Let's say interest rate too high, then suddenly people stop investing, so on and so forth, and get into trouble. So in fact, forex is actually one of the main. So inflation will still go up. Okay, that's one force. And I'm not too sure whether you all caught this article. So again, if you all don't mind me sharing, let me just share my. Okay, I hope you are seeing my screen right now. Okay, Singapore will have more billionaires per population versus US, China by 2030. And if you actually read in detail, I'm actually quite sad. Unfortunately, I'm not one of them. We are looking at about 7 to 8% of our population being millionaire in 2030.
Right.
Okay, so of course, quite a number will be driven by foreigners. So again, you can see that the demand for our currency will increase, especially now we are more like a hub for family offices. So I do see that the demand for currency increase, but as to how much, that one, sorry, I am not really a currency analyst, but I do see a lot of forces to either keep it or at least can keep it going even higher. Yeah. So sorry, hope my answer is satisfactory to you. Yeah.
Okay, sure. Yeah, if you have any other questions, guys, you can ask those questions because we have another 20 minutes for Imin. While CH Ang looks like quite interested in the Singapore market, he's asking another question here. Yeah, say must use interest rates to fight inflation. If they cannot raise interest rate too high, there will be limited upside for
No,
Singapore
like I
dollar.
said, MAS they use
Is that-
forex. They use forex to fight inflation. They interest rate is not their main tool. Yeah.
Yeah. Okay. Thank you. All right. So moving forward, Imin, I know we are already like in the fourth quarter, November, December, going to be the fourth quarter lah. Where should investors look at opportunities right now, in your opinion?
Okay. So I think, at least based on my interaction with Malaysians, I still remember, of course, that was so long ago. I actually went to Malaysia to did a talk. I think that was like 2012, 2013. The first investment related word I learned, of course, from that particular group, it's goreng.
Going okay.
Okay, of course, things has changed. Things have changed. It's just that I'm in fact for Singapore as well. I really hope that there is also, besides trading, there also should be equal emphasis on investment. Okay, and the one of the main differences is I think trading is straight up, okay, your objective, more money, more money, more money. Okay, whereas from an investment perspective, is really more of where you want to be, how do you actually get there. Okay, then after that, eventually choose the set of tools that can help you. So like for example, what I personally do, I always tell people I have 6 pots of funds, ranging from fixed income to, of course, REITs, to funds, to stocks, and to eventually things like more sexy things like options. Yeah. So if you ask me, I mean, end of the day, it's good to start building up your different pots to actually reach there. Yeah. So that is one. But if you are looking at if is there any particular instrument or particular sector that from now to end of the year that it will actually prop up, I personally, like I said lah, I am actually still quite bullish on the US markets. Okay, so personally, I'm actually slightly involved in the options. That's one. For REITs, I think the REITs, okay, maybe in terms of the quantum, okay, may not be as good, but I think for REITs, we are actually getting at a very good price right now. Okay. Bank stocks, I believe still have some room to run, because basically with the interest rate going up, okay, they are going to benefit. If you this is a no-brainer, they actually just outright say, every time the interest rate go up, the banks is just going to benefit. And given that, like for example, 3 banks giving above 4% yield, even though they have run out a bit, I think they still have legs to run. So generally speaking, this is what I'm focused on right now, the REITs, the banks, and of course in terms of market wise, probably the shorter term is US, and I am actually still have a very little side bet on China.
Yeah.
Is as if you ask me, is artificially depressed. Or either that, put it this way, see what happened to Singapore, Malaysia. Once we start to open up, it's crazy, right? I'm not sure about Malaysia. It's like Singapore, suddenly the price just shoot up. Suddenly the economic activity just went up so quickly. By the way, that day I almost wanted to apply for a job in dishwashing. In Singapore, can go up to 3,005 Sing.
Yeah. That's what I heard also. I mean,
I was like 3,005 for dishwashing, not too bad, not too shady. So can you imagine the day when China, okay, I believe the day will come. Basically say, okay, enough. Okay, they just have to live with the virus. I believe the day will come. Can you imagine, what kind of rebound that's going to be? But of course, the question is when. That is a big question mark. So now I'm still very small bet. So the shorter term is still REITs and banks, US market, and yeah, China is, yeah, hopefully I can, bring my retirement age earlier by another 3 years, hopefully.
Right. All the best to you. Okay. Yeah, thank you so much for the answers. So guys, if you have any more questions, you can type the questions. Now, before we continue with I-Min, I'm just gonna make a few announcements. Actually, only one announcement lah. Right. Before we get I-Min back again. But I just want to share with you that I-Min will be back again on the 25th of September, which is on a Sunday, right here in Kuala Lumpur, which is basically going to be at Equities Tracker's office, where he will run a half-day workshop. So this is a workshop, a half-day workshop. So this is really an opportunity for you to come down and also, meet him personally as well, where he will be basically teaching us how to create an income portfolio with SG Dividend Kings, which are stocks and also REITs lah. All right. So if you guys are interested to know how I-Min built his income portfolio, then do join us this 25th of September, which is going to be about 2 weeks from now. Right. We only have a few seats available because our office we can only take about 40 people max. So please do take this opportunity to sign up. It's not free. There'll be some cost. We still have to pay for I-Min's flights and all that. But this is a very sponsored fee lah. All right, because if you look at the price here, you will not be even able to actually get him to come down here to speak with us or to basically share with us, right? So basically, this whole workshop is about how you can learn to build a consistent income portfolio in times of uncertainty. The focus is on Singapore markets because the opportunities are there. Like I-Min just mentioned to us earlier, right, that Singapore provides really good opportunities for income portfolio. So we're not talking about trading or so, right? But this is income, and in this kind of uncertainties, is really best to look for a steady, consistent dividend paying either stocks or even REITs. All right, and we will also share with you how you could also use a very simple screener to identify these opportunities, right? Whether it's in stocks or in REITs. So it's going to be a half day morning seminar from 10 to 1 p.m. All you need to do is to actually register. There's a link there. Our colleague will put the link shortly at the comment section. All you need to do is to put a 88 ringgit commitment. We cannot give for free because this is 88 ringgit commitment. If not, we do not want people to just register and then don't come lah. Then you'll miss. You give, you take the seats and then other people can't come. So that's the reason why we have the 88 ringgit, and of course that includes refreshments and all that as well. So please, really, this is a one-time opportunity where we are able to bring I-Min all the way from Singapore down to KL and to share with us how you could do this. All right. So please do click at the link before. Seats are limited, and we do hope to see you guys on the 25th of September. And really, Kelly is asking whether it's online. Unfortunately, it's not online. You have to come down to Petaling Jaya lah. All right. I mean, I know there's people asking for online webinars, but because we're actually getting a very special workshop for you guys here in KL, where I-Min, if he can fly down to KL, I think you guys can come down to KL as well lah. All right. So yeah, please do sign up. The link is there. I do hope to see you guys, and I think I-Min will also love to see you guys, Malaysians especially, to invest in Singapore, and he will be sharing with you guys this 25th. All right.
Yes. Do come down. Really looking forward to meet all of you, and I mean, I have friends with Malaysian. I think really having the REITs portfolio is something very complementary. Be it you're currently a trader or or already an investor. Oh, you're also stationed in SG now.
Wow.
Well, you can always come to KL and visit your family. Yeah. So yeah. So in this webinar, I'm of course going to share with you really the investment concept. Okay, it's really not so much about which REIT is good, so on and so forth, but how do you achieve the investment objective? Okay, I'm quite sure most of you actually want financial freedom. So in fact, end of the day, you may be trading, blah, 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 so on and so forth. If you go and ask yourself deep down, what do I really want out of this? I want financial freedom. Okay, I want to come to a point whereby if let's say, for example, this whole month I don't feel like doing anything, I could. Okay, and if you really want that, you must have a steady stream of passive income. What is passive income? Money just go to your bank account, no question asked. Okay, if you ask me, even you do buy a property for rental, that is not really passive. You still have to chase your tenant for your rental. If let's say the bulb spoil, this one spoil, you still have to go and repair. Like for example, I know of this person, owns a $3 million property, drive a Mercedes. Then the tenant called, hey, the bulb spoil. He want to save some money, so he drive his Mercedes down, go and buy a bulb, go and repair. So whereas if you talk about REITs, is really passive income. It just come to account. Okay, and so this is what I'll be sharing is the whole concept of building that portfolio. What should you be doing? So of course there are some good REITs, there are some maybe not so suitable. Like for example, why do I only look at 25 and not the full 39 REITs? Okay, I'm not saying the rest are no good. Okay, but then how do you actually differentiate amongst them? Then after you ask yourself, what are the risks you can take, what are the risks you would not want to take? Okay, how do we actually analyze them? So of course, besides REITs, we will also be looking at other Singapore dividend stocks, which just now we discussed. There's actually quite a number. And just one more reason why I think you should attend is because this timing is, I would say, is very good timing. If I could just share one chart, if you don't mind, just share one chart.
Sure.
Let me just share my screen. Okay, so this is the chart of the Reits index right now. Okay, this is Singapore Reits index. I think it's quite self-explanatory here. We are actually looking at quite a good timing. Quite a good timing. Okay, so I really hope more people can enjoy this lah. Yeah, rather than I've heard enough lah. If only I have attend your lesson. Yes, yeah, I think this is usually this is the time whereby if you really can, I think you should try to capture this opportunity. Okay,
right.
Yes.
Yeah, so if I-Min says it's the right time, I mean he has that experience in investing in REITs for quite some time. If he says the right time, is really, I think this is a really opportune time because we haven't really seen these aggressive interest rate hikes since. I mean, we have been always looking at interest rates going lower and lower and lower, and we have all this quantitative easing and all that, right? In the past few years, but now it's the other way around. So yeah, it's a little bit interesting. We are in definitely interesting times right now.
Yeah.
Right.
Yep. Yeah. So well, all I can say is I put my money. Okay. Basically, I what's the term? I put my money where my mouth is. Okay. Whatever. So the only thing is, if I'm wrong, my skin is in the game. Yes.
All right, but what would your advice be for those who have not invested in REITs before? Because what, in Malaysia, especially Malaysian audience, like REITs is something boring. They are maybe Malaysians. They are all, like you say, mostly maybe traders, right? Of course, they are investors as well, but they always look for growth stocks. People talk about semiconductors and electric vehicles. All this is strong growth, trend growth, right? But very little about REITs. So if I've been, for example, if I've been investing in stocks for quite some time, but have not invested REITs before, what would I be expecting if I'm investing in REITs?
Okay, so all I can say is, sure enough, have a little bit of patience. Wait for one dividend season. So basically, we have dividend seasons. It's usually like February, May. In fact, August, September is actually one period. That's why this period, I'm a little bit happy. Then I think there should be one more in November. Okay. You just invest, wait for the dividend seasons, then just see money come to your bank account. I think your perception will change. It's like, I actually had this interesting discussion with my trader friend, you know. He has to spend sleepless night. Okay, of course, I think he trade US and Singapore market. He can work like 18 hours per day. You know, of course, as in all trader, you have your fair share of wins, your fair share of loss. And I use my method, you know, I buy, I go and sleep, okay? Then I look at dividend coming in. And interestingly, our performance is not very vastly different. It's not very vastly different. So, yeah, don't belittle dividends. So a lot of people had the impression that dividends is only a few dollars and so on and so forth. Once you have like a very interesting portfolio, you know, it can be quite interesting. Yeah. Yep. So probably that's all I say. And the other point is time is of essence if you actually want to build a portfolio, because portfolio you cannot rush. One thing we actually always advocate is we not only diversify over different REITs, we also diversify over time. Okay, diversify over time. Yeah. I mean, it doesn't make sense to say like, oh, after you listen to my talk, you trust me so much, then you suddenly 70% of money in REITs. No, that's also not the correct way to do it. You have to diversify time. So time of essence. And you think about it, okay, do you really want to just trade for the rest of your life, even when 80 years old? Or do you want to come to a stage whereby, there's one point in time, your passive income going to cover all your expenses? You can go to Europe, you can go to whatever, sponsored by the stock market, you know, by passive income. Because basically REITs, you are landlord, right? You know, like Raffles City. I'm not too sure you're familiar with Raffles City in Singapore. Okay, Raffles City, it still looks new to you, but it actually is how old? 34 years old already. 34 years old already. Can it still last for another 30 years? I think there isn't a problem. You know, you're just collecting very fixed income. You know, that kind of retirement life compared to what every day still have to trade stock market to actually get your income, you know. So
yeah, this is passive lah, right?
Correct. Yeah. So yes, something for you to consider. And of course, I'm not trying to say which is better or not, but end of the day, diversification, I think we should have one of each. Yeah, some of each.
Yeah, so interesting. I mean, guys, really, if you want to have this opportunity to also continue to engage with I-Min, please do join us this 25th of September. I'm sure that 3 hours he'll have a lot of sharing with you guys. But I think what's interesting that he says is not just going to come here and talk about, you know, which one is good, which one is bad, but I think more on the thought process, right? I-Min, on how to actually build that income portfolio, whether it's REITs or even dividend paying stocks now.
Correct. Yes. Okay. Yeah. So yeah, quite interesting. You know, I actually do have. I mean, of course, in Singapore, I do have trader students who never received dividend before. Then after that, got dividend for the very first time. Like, oh, okay, money can be made this way. So it's quite. I think quite interesting.
Yeah. A lot of people, I think, always forget that dividend portion of making, returns from the stock market. There's always capital gains, but very little has been put thought into dividends. But like you said, I think the interesting about REITs is because it's really right. Some of them even pay on a quarterly basis. Some of them half yearly.
Now it's mostly quarterly. Yeah.
Most quarterly, right? So you can really see the income coming into your bank account every quarter. That's fantastic. And yeah, we have this Malay saying that lama sikit-sikit, lama-lama jadi bukit. But I think because when we receive dividends, say so little only, right? So little. But I think when you continue to receive it and you compound it, that one can really grow a lot lah. I think a lot of people don't see that lah.
Yes.
Yeah.
And of course, this is not for the faint-hearted. So REITs, generally speaking, is a low risk instrument, And if let's say, for example, you want something more sexy, we also are doing things like in Singapore. Of course, I'm not too sure how the environment like in Malaysia is. We also do this thing called margin on REITs.
Margin on REITs.
Yeah. So basically, after I margin up, I could get about 10 to 12. In fact, I think my highest is actually about 15%. Of course, not every REIT. 15% yield, about 9 to 15% yield, margin up.
Right. So basically getting leverage from the margin you put in.
Correct. So it's basically exactly like a property investor. Like for example, if you actually buy property in Singapore, I think there's a lot of Malaysians also like to buy properties in Singapore. Yeah. One of the ways they are very clear is actually do the leverage.
Yeah. 10% down.
Yeah. Singapore now, I think correct. Yeah. And for REITs, it's exact same principle. Are you buying property? You're buying property. Do you have leverage? You have leverage. Do you have rental? Better. My rental just come in. I don't even think about tenant.
Yeah, right.
So it's exactly like a property investment game. And you buy property, you got $1 million, you buy one property. I got $1 million, I easily can buy 500 different properties in my REITs basket. Yeah.
So the margin thing, is it embedded, or you actually have to get margin from the stockbroker to invest?
Yeah, stockbroker. So it's just one stop shop. That means I just have to go to a particular stockbroker. Yeah, yes.
All right. Okay. Yeah. Well, quite interesting though. I mean, if you guys want to know more about how you can invest in REITs and also dividend income, building an income portfolio of investment, please do join us on the 25th of September, where I-Min will be down right here in Petaling Jaya in Equities Trackers office. The price is 88. The link is there for you to register. And remember, it's first come, first serve, because we only have a maximum of 40 seats available. With that, it's already 9 p.m. You know what, I-Min, thank you so much for joining this session, and I'm sure that people have now opened their eyes towards so-called boring investment instrument like REITs and income, but really these kind of times you see quite interesting yields, right, from Singapore, and therefore please do join us on the 25th. And I-Min, do you have anything last thing to say before we end this session?
Yeah, I really hope that more people can come. In fact, this will be my first Malaysian talk after COVID. Of course, pre-COVID, there was one period I was going out Malaysia almost on a monthly basis. I mean, COVID, for various reasons, I can't, and I am actually so glad to be back. And of course, thank you, Equities Tracker, for inviting me. So really, really hope that, can see more of you all. I think in that session, you do expect a lot more discussion. Things have been changed. I like one thing, like for example, crypto. I think crypto wasn't that popular pre-COVID. Now it's about crypto and so on and so forth. Of course, the main topic is actually still REITs, so on and so forth. But I really hope that we can have a discussions. What is next? What is happening? What has changed? And from there, end of the day, like I said, where I come from is really what's the objective and what are the different solutions that can be objective. Hopefully we can have a discussion on that as well. So really hope that more people can see, be here. So and my point is, of course, REITs is not the main thing, but really I also do see that the face-to-face interaction, we're actually going to learn a lot from each other. Yes.
All right, awesome. Can't wait to look forward to meeting you on the 25th, I-Min.
Same. Yeah.
Nah,
I heard you're buy me a good dinner, right? Yeah.
Yeah, that one Lily, you're gonna buy you a good dinner.
I miss the Malaysian food, man.
Oh, really? Okay, lah. Don't worry, lah. We will make sure we feed you, lah. You're gonna
gain
5 kilos before you go back.
Thank you.
Okay, with that, thank you so much, everyone, for joining us tonight as well. We wish you all the best, and we see you on the 25th of September. Thank you, and have a good night.
Thank you so much, everybody. Thank you. So thanks, Ben.